that matter. There's nothing like having the freedom to do what you want, when you want, how you want, because when you're generating income, investing and scaling without having to trade away your time and your energy, then life just gets a lot different. You can actually start to think, you can start to plan, you can start to prosper. None of us were meant as human beings to sit and slave away 9 to 5 behind a desk. We weren't meant to do that. I feel very, very blessed. It's an honor, and I know it's glory 100% to God, but to do what we're doing right now without having to slave away behind a desk, without having to cut out lattes, without having to be like stuck in the current system, this was a gift from God, and I'm gonna share it. I'm gonna show you all of my insider secrets for it, okay? Don't wait on this though. I capped the number of people because I'm only looking for action takers.
Yeah, I'm John Robinson, and my company name is John Buys Houses, johnbuyshouses.com. I bought some houses, I bought some duplexes, I bought a fourplex. So I bought various things so that if markets ever turned in one particular area, I was okay. So I diversified pretty well. I don't put an hour a month into it. It's really, I look at it at the month end, that's it. Really once in a while I call up and say, hey, everything going okay? And they said, yeah, fine, and that's about it. It's really peace of mind. I could do what I want, when I want. I go to the cabin for a week. So I have freedom, and that's the thing. If I was retired and just in the stock market, it always has peaks and valleys. And if it took a dip, I'd be like, oh my God. And now I don't care, because whether the house value goes up or goes down a little, it's rented. So I know the money's gonna be there. One of the things I like about Home Invest is they're really there from start to finish. Here's a property, you suggest you buy it, they fix it, they get a tenant, they rent it, you don't have to do anything, and I'm happy doing nothing. And just from my personal experience for 10 years, these guys have been A+, and I could not have done it without them.
So you invested in some turnkey rentals with us. How did those go for you? Like, first off, tell us, like, why did you invest?
So I work on Wall Street, and I've always wanted to put my excess cash at work. You know, I was always attracted to real estate. It's just something that I thought would suit me a little better. And also I thought it wouldn't take as much time. And it was Super Bowl in 2017. Nate and I were exchanging a few messages, and he sold me a home. Today I own about 25 properties. I was running the numbers this morning because I knew I was gonna be on this call today. My total return, realized and unrealized, on that investment from my down payment is approximately 450%. So essentially, the property doubled since the time Nate sold me the property.
What's been holding you back in your real estate career?
Trying to balance the focus between my 9 to 5 and moving into this, which is what I really want to move to, is a replacement for my income.
Awesome. And what did you come here looking for into this event?
Systematize. A way to systematize this process step by step, because I'm kind of an engineering type. So it's like, A, do this, B, do that, C, do that. And if I learn, once I'm told how to do that, I can adopt it and go forward. So I'm looking for that systematizing.
What, if anything, have you tried before?
None. I've been in the real estate world for a whopping 3 weeks. So
Okay.
I think, but I do feel lucky, having seen all these other people, that I feel lucky that I landed on this one without having to go through all the other learnings that everybody else has had. That's nothing compared to this. So I feel great about that.
Awesome. Thank you. What is the one thing that you've learned so far that will be your biggest takeaway from this event?
That I should probably, so we just recently, I was talking with Steve Martin. He said, what would you take away to replace with something here? And it came in right away. I should stop spending time 2 or 3 hours watching TV and news and stuff like that. That would be very helpful for me.
Awesome. So if someone were thinking about coming to one of these events, what would you tell them?
Run, don't walk. Come on, it's worth many, many times what you're going to pay for it. It's an investment.
All right, man. Thank you so much.
Sure, thank you.
What was the one thing that stuck out about working with Nate and the team and Home Invest? What was just one thing that like made it really easy to deal with them, or one thing that you would say about Home Invest in general?
They really understand what things look like on our end. I think Nate has a long history of investing in real estate, and they understand what matters they understood what mattered to me when I was first buying, and really helped me throughout the entire process. So I can't, like I'm at a point financially, I'm really doing quite well, and I think Nate has a big part to do with it. He was really instrumental when I first started investing in real estate, and can't thank him enough. Honestly, incredible person, great business. I strongly recommend it.
Trying to figure out how to better manage my time and working towards putting a team together, because I know with where I'd like to go, we want to build this up within our family.
Awesome. What have you tried before?
Been doing buying houses and rehabbing, not to flip, but buy and hold. So I'd buy things and fix them up and hold on to them long term as rentals.
What's the biggest takeaway you've gotten this meeting so far?
Getting some knowledge about how, really, I think some time blocking and getting some accountability. Some people I need we need to keep each other in check in on each other, and make sure we're staying on our targets instead of trying to do it all alone.
Awesome. If someone was thinking of coming to one of these events, what would you tell them?
If you're serious about it and you're really wanting to get into real estate at a level worth doing, by all means, the knowledge is power. And this is such a group of people that there's so much knowledge, and not just the knowledge, but genuine people who want to see you do well. And that's priceless. You can't put a price on that.
All right, that's awesome. Thanks, Jeff.
You've seen what other people have had to say. Now it's time for you to put this stuff in action for you and for your family. We'll see you at the next event. Welcome. Let's get this show started. Hey, pleasure to have you guys. My name is Nate Armstrong. I'm the CEO of Home Invest, and I have the pleasure of bringing to you a lot of data today and some economic policy that we might not see in the news media narrative. I get to unfold that for you guys today. And Home Invest, we've been around now for 11 official years, and we've been able to successfully raise capital to buy a lot of assets in different parts of the country. And what we're going to be doing and talking about today is from the perspective of a fellow investor. So if you're looking for like political policies on, hey, women's rights and things like that, I'm not your guy for that. I'm the least qualified to talk about that. I'll be talking about it from a tax perspective. We have a lot of investors. We have a lot of team members here that I'm responsible to make sure that we're performing. And so I'm going to talk about it from an economic and tax perspective only. Okay, so let's get right into it. First and foremost, I will share screen, and Sue, maybe you could give me a wave if you're able to see my screen once it pops up, and we will get into the actual data portion of this. And we are streaming too, so those of you folks that are following us on social media, if you type your questions in the chat section, we're going to do our best to make sure all of them get answered today. If for some reason we miss one of them, we will make sure that we follow back up with you. And if you're following us live on this platform, you can use the comment section anytime you want. Just type a question, and I'll make sure that we get to tackle it while we're all together today. Okay, so first off, to help, what we do is we help our investors basically pursue and achieve financial freedom through safe real estate investing. And we're going to openly share today what we're doing in this current economic environment and what we're positioning for even after the presidential election. There are basically 4, maybe 5 big things that we need to cover today. Number one, what are the economic moves that are going to come following the Federal Reserve's notice today? You guys remember what day it is? Other than Wednesday, September 18th, it's a really big day. Right now, we've got the Federal Reserve meeting literally in 1 hour. And as soon as this broadcast is done, I'm going to tune into that and I'm going to pick up what's going down. But they're going to make some big moves. They're cutting rates for the first time in 4 years. At least that's what's been foreshadowed so far. So we're going to talk about that today. And we're going to talk about what you should do and maybe shouldn't do for your investments as they make these moves. Next, we'll talk about the political landscape without taking sides. Again, I just want to go through it from a fiscal responsibility standpoint. Number 3, we're going to cover the most attractive and the most unattractive real estate investments that are on the market today. I'm going to cover both sides of the aisle for you guys. And number 4, we'll go through a pipeline of what we're working on. So you can actually see live, like what we're doing with the knowledge that we've researched to go out there and put it into practice. You can actually see that today. And then if there's time, I want to make sure we tackle any and all questions that you have. We won't keep you forever today. It's mainly just to serve you and serve our community. So if you've got questions, you can put them into the chat as we go. Okay, so what is actually happening right now? Like the landscape of the market is producing something that I would call killer deals. I haven't seen killer deals abundantly since 2010. I see really good deals because we do a lot of research and dig them up, but killer deals are starting to emerge again. And I'm going to be talking about that. This picture that you see on your screen right here, this is a killer deal. We're literally in a position right now, if the seller signs off and everything, it's still being negotiated. But if the seller signs off on it, we will be buying this particular deal at about 65% of what market value is. We'd be buying it for less than they bought it for 2 years ago by a long shot. Huge, huge discount. And there's a few economic triggers that have happened to create killer deals like this. This is a beautiful multifamily property. It's in a major market that all of you would love. I'm 100% confident of that. I can't release that address or location right now, but I'll get into it. But I just want to show you like what's possible because of the marketplace and the policies that are in place right now. Okay. Quick disclaimer. I'm not a CPA. I'm going to be going through a lot of tax stuff today, but I'm going to do it for illustrative purposes. I'll be talking to you as a fellow investor, but I have to tell you from a professional standpoint, anything that you see here, it's for educational purposes. And if you're going to implement something, obviously partner with your tax, legal, and financial professionals. Okay, first one, Fed moves. Let me know in the comment section. Are rates going to cut? Are they going to go up? Or are they going to stay flat? I just want to take a quick consensus. Are rates going to cut? Are they going to stay flat? Are they going up? What do you feel is going to happen with rates right now? This will be an interesting quick little poll. You think cut, cut, cut. So I've only seen cut so far. Doug has got the most bold, putting his number out there. He's calling a shot. Babe Ruth used to call his shots before stepping up to the batter's box. Quarter point. Okay, quarter point. What if they cut a half a point? What if they do what Scott's suggesting, they cut a half a point? Is that a good sign or a bad sign? Good or bad? What if they even go bigger? What if they go 0.75? In a little bit, I'll get into what I think will happen if they do anything higher than a half a point. I think that Federal Reserve's in panic mode. I'll explain that in a little bit, but I looked at the last 75 years of data. I won't bore you with all this. I know that this is a terrible slide because it doesn't show it very well for you, but I'll dissect it for you. In a bearish environment, when the Federal Reserve comes out, their main thing, like you've heard Jerome Powell for a couple of years now saying, we have to kill inflation. We have to kill inflation. And so what the Federal Reserve did is they took this giant wrecking ball out. Think of it like if you've ever driven by a site that they're demolishing, a big building they're taking down, and they've got that big crane with the big metal ball on it. They smash the building to take it down. That's kind of what the Federal Reserve does when they're trying to take down inflation. They basically raise the interest rates and they say, we're going to keep raising rates, make everything more expensive so that prices have to come down. And so far, they've been succeeding on that. At least the preliminary numbers are showing that. And that's why they're coming out saying, you know what? We think we're going to cut. That's the telegraph move. We'll find out here in less than an hour, about an hour from now, we'll find out. But that's the telegraph move. Everyone's thinking somewhere between quarter point and a half a point. Now, when I go back through the data, I noticed a trend. When they cut more than half a point, it's usually because they're in panic mode. Mark my words on that, okay? They won't telegraph that. The Federal Reserve, like it's his job to provide peace and calm. Notice how stoic he is every time he steps on that podium. He never wants to signal something that's going to cause chaos. But what I've seen from history is that if it's more than a half a point move, 0.75 and up, it's usually because they're quickly trying to reverse direction. So I'm very excited to see what happens today. Let's bring it out. I agree with everyone so far, somewhere between 0.25 and 0.5. That's what the betting markets are saying, but let's find out. We get to witness that together in just a little bit. Okay, State of the Union really quick. I want to give everyone the lay of the land for where commercial real estate's at and where residential's at. Commercial has already been beat up. When the Federal Reserve started raising interest rates, it took commercial value down. Commercial was already soft because what happened to office spaces during COVID? Did their vacancy go up or down during COVID? Let me know in the comment section. Did occupancy on offices go up or down, or vacancy, however you want to put it? What happened? Well, we all know, just like Vera's saying, vacancy went up through the roof. People were starting to work from home. Companies were mandating that you work from home. The government mandated that we stay home. And so consequently, it was already a soft market. And then when interest rates started coming up, it destroyed the office market. It also hit some of the other industrial segments as well. You can see on this slide right here, even apartments highlighted in yellow came down some 30%. Industrial came down, everything across the board, because when rates went up, it made the debt more expensive. Therefore, it's pushed prices down. So in my humble opinion, commercial has already crashed. If you were looking for a commercial real estate deal, they are out there right now. From this point, I'm going to show you some data on this, but I really believe it's going up from this point. Okay. Well, how can I say that? Nate, do you have a crystal ball? No, I don't have a crystal ball. I'm just in the game. I'm playing the game every single day. I've got a lot of partners. I even see Doug and Sue and others that are on this call. Like, I'm playing the game. We're playing it. We see this every day. This building right here on your screen, this literally in 2006 was purchased for $332 million. It just sold last month for $8.5 million. How does a property go from $332 million to $8.5? Big dynamic change. You got one of the biggest funds in the world, BlackRock. They're not the biggest, but they're one of. They're saying now is the time to invest in commercial real estate. Okay. What about this one? This is Market Square in Washington, D.C. It was purchased for $613 million back in 2011, just a little bit more than a decade ago. And it sold earlier this year for $323 million. That's nearly a 50% haircut. This is what I'm talking about. Killer deals are coming out. This is why I know and feel so strongly that the deals that are out there right now, this is the time for commercial. Or this one. This one here is in New York. It was purchased in 2018, not that long ago, right before COVID, $153 million. It just sold for 1/3 of that price at $50 million. This is the bottom of commercial, okay? You can see a quick article on the screen right now from Blackstone. Blackstone's president, John Gray, came out, president of real estate, and he said, we believe we've hit bottom. And they committed over $200 billion to buying specifically multifamily. He didn't say offices, he said multifamily, because they believe that they hit bottom. Blackstone is the largest landlord in the world. I pay attention when they're moving $200 billion. I'm taking note of it, okay? Here's another one. This multifamily property right here was built in 2021 for $207 million. That's the loan on it. And it just went through a bank mitigated sale called the short sale of $129 million. Does anyone remember the term short sale? Just type yes in the chat if you remember that term short sale. Back in 2010, 2011, 2013, like those short sales were common. It means that the bank is willing to take a discount just to let the property sell. That's happening again, not on single family, but on commercial. Okay, this just happened. This is a giant short sale on that beautiful multifamily property. Here's a property I'm following. I'm following this one through an auction right now. It had an appraisal in 2021 for $5 million. We've got a target buy price on it of $1.5 million. This is a beautiful, beautiful area of downtown St. Paul. These are real deals that are out there right now because of what's going on. Here's a deal that we closed the last time that we went through this whole cycle. The last time the market created these killer deals, we bought this one. It's a 20-unit building. We bought this one for $492,000. We went in, we did some updates to it. We leased it out the way it's supposed to be leased. And then we sold it after about just less than 2 years for $1.7 million. Bought it for $492,000, sold it for $1.7 million. That's what can happen during cycles like this. Now, I want to spend just a second before I get into the policies of our two presidential candidates. I want to spend just a second on single family houses. So single family houses, you guys are probably still feeling it. You probably know it in your backyard. Most markets are still holding strong. Single family and some markets are still going up. I just read a report on San Jose, California, where they're seeing a surge again. And so what I would equate that to, if you just look at the arrows on the screen right now, single family is still trending up on a national basis. I know there are some select markets that are going down. Florida's got a couple cities. Texas has a couple cities that are starting to go down. But for the most part, single family is still holding strong. Commercial is what's come down, okay? So in my humble opinion, if you're looking for the right real estate specific opportunities, I would be looking at commercial. This is your window to buy, like instead of messing around with single family right now. There will be a time and a place for that very, very soon. What you're seeing on the screen right here, this is basically, let's just call it the 100-year history. It's more like 75 of single family houses. Sometimes we think like 2010, it was so bad, it was so terrible, it took prices down. Yes, it did. You can see here, if I move my mouse on the screen, the 2010 era is right here. But when you stretch it out over 75 years, it wasn't that terrible. And I suspect something like that will happen for single family houses. I just don't know when. None of us have the crystal ball. Right now, we haven't quite hit it. There's still some pent up demand for single family houses. Commercial, on the other hand, it already happened. We're already past it. We're in the bottom of that valley. And I believe that we're going to start climbing up from it from here. Now, we started this conversation with Fed effective fund rates. Basically, what is the interest rate that the Federal Reserve is going to be? Are they going to cut it? Are they going to raise it? And then how does that affect the actual market? I zoomed in on this slide right here because I want to take you back in time, specifically to 2007. The left side of the slope here that's at the high point, that's July 2007. July 2007 is basically a repeat of where we are today, September 18th, 2024. Why do I say it's a repeat? Well, because on July 2007, the Federal Reserve had the big meeting that they're having today to basically announce to the world that we're cutting rates. And you can see in the preceding months afterwards, it was about over an 18-month window, they cut the rates. This gray bar on your screen right here, this indicates a recession. So even though they were cutting rates, a recession happened. Now, you might say, well, Nate, isn't the whole point of cutting rates to prevent a recession? Are we going to have a soft landing? Isn't that what's going to happen? Anything's on the table. None of us really know what's going to happen because, let's face it, they printed more money in the last 2 years than they ever have in world history. We've never seen an influx like that. We can't predict the outcomes and all that. None of us have that crystal ball. So all that we can do is look back in history and try to make some accurate predictions of what the future might hold. I expect, since the Fed is pivoting now and pulling back and saying we're going to start cutting, I expect that they're trying to prevent recession. They're trying to do the soft landing. Just from data, if I go back through the 75 years, a soft landing is a very, very hard thing to do. It's a very, very hard thing to do, okay? Let's talk policy now, okay? This is probably why most everyone came here. I'm going to talk about two different platforms, essentially. I'm going to talk about the Trump policies, then I'm going to talk about the Kamala Harris policies. Trump, I'm not going to spend much time on because we already know what we can expect from him. He's already been in office. He hasn't changed much. It's a very similar story to the last time that he ran. What does he stand for? Cutting taxes, cutting regulations. He stands for basically trying to get more money flowing through businesses that can trickle down. That's pretty much the premise of it. So I'll take a nonpartisan approach on that and leave it where it sits. We bought this property on your screen right here about maybe 2 years ago now. And one of the benefits that we got from it is the day that we bought it, I should say the month that we bought it, one of the policies that the Trump administration passed was basically a huge tax favor for people that own real estate. It's also other things that it encompasses, but for real estate investors like us, we were able to do something called accelerated depreciation. And we could do it in a very advanced fashion, meaning we could get more money cut from our taxes in a shorter period of time. That right now is still on the table, but it's phasing out. And the next president that comes into office, they're going to have a big choice. They're going to say, we need to keep this, or we need to cut this and let it go, let it die. And so from a fiscal responsibility or from a fiscal perspective, thinking about the 30 employees that we have here and the hundreds of investors that we serve and manage their money, I'm all for keeping taxes cut. And so on this notion, I really hope that they extend this tax principle. It's called the Tax Cuts and Jobs Act. If you're looking for like what to search on Google Tax Cuts and Jobs Act. We got a 9, write this one down for me, just so you remember this. I want you to remember this part. From buying this one building, and this isn't that big of a building, it's only 72 units. This building gave us a $978,000 tax break. Technically, it's called a tax deferral. Technically, you have to do some things inside your taxes to make sure you qualify for it. But at the end of the day, myself and partners were able to participate inside of that tax break, $978,000 from buying one building. That's the power of that tax proposal. I really don't want that to go away. I hope that that gets extended forever because it provides a lot of favor for people like you and I who are trying to pay less in tax. Okay, the way accelerated depreciation works, this is another view. We bought this property last December. Beautiful property in Lexington, Kentucky, all bricks, cash flowing well. It's never missed a distribution to our investors. But the bottom line on it is that when an investor invested $1 into this particular asset, they could qualify for up to 41% of that back as a tax break. Imagine that. Like if you go in and buy Apple stock and you said, hey, Apple, I'd like you to give me a tax credit for 41% of what I put in. Apple would be like, well, we can't do that. We don't offer that. And it's because of the way that the tax code's written. So I really want this particular thing extended. And this is something that is not in the Harris plan right now. Okay. So let's talk about Harris. Okay. Harris has championed something called increasing capital gains tax. Well, what the heck does that mean? What is capital gains tax? I know some of us here, you guys are like, way smarter than I am and you understand capital gains inside and out. For those of you that don't, I'm going to take it down to a 10-year level, and then I'm going to go up to the advanced level. So from a 10-year level, pretend you bought stock in Apple. You did it more than a decade ago. You got it for $100 a share. And believe it or not, more than a decade ago, it was $100 a share. Now, in today's market, it's worth well over 200. I don't even know what it's trading at for right now. But let's just pretend it's worth $226. And you decide to sell. As soon as you sell, the profit that you made, you now owe taxes on it. That's called a capital gains tax. Okay. So if we use long-term capital gains, which means that we've owned it for at least a year, long-term, that's longer than a year. If we use that tax rate, let's just assume that it's 20%. It ranges for people, but to be safe, let's say it's 20%. Well, the profit of 126 times 20% is about $25 in tax. That would be owed to the government for that capital gain. Now, what they're proposing, and this is an amendment, those of you that maybe you caught some news article from Harris a month ago or so, originally she had copied and pasted Biden's capital gains tax proposal, but she's now ripped that off the table and she's changed it. So it was in the 40 percentile, now they've amended down to 28%. This is a slight win, in my opinion. If Harris is elected and she's in office, I was a little bit worried about seeing that 40% tax on the table. There's ways to get around that I'll talk about in a minute, but now that it's back down to 28%, this is a little bit more manageable, a little bit more in line. So that means it's still higher than it is right now though, okay? It's still much higher, but it is what it is. So on that same gain, that profit of $126, now we would be paying $35. And sorry, I have a little typo in my slide right there. It should be 28%, okay? It's still an increase from where we stand today. So how does that work in real estate? We buy buildings like this one on your screen. We're closing on this building, God willing, by the end of next week. Beautiful property, one of the most sought after ever. It was never listed on the market. Like we find these hidden gems like this. In fact, since we've gone under contract on this property, the seller got an unsolicited offer from a cash buyer in town for much more than we got it for. And so the seller was kind of hoping that we might cancel the deal so he could get more money out of it and sell it to this other cash buyer who found out about the sale kind of through a backdoor channel. We're not letting that happen because our investors love this deal. And so let's just say that I invest 100 grand in this deal and I'm become one of the partners that are inside this deal. We project over the next 5 years or so that we're going to increase the value of that property. It doesn't happen on day one, but it happens through a systematic process of us redoing some of the units, making them nicer and increasing rents over time. That time period, let's just say it's 5 years because that's about on average, we can probably double the capital that was invested in that deal. So let's just say that we double it. And then at the end of 5 years, we sell it. That gain, that profit, that will be something that's subject to capital gains tax in most environments. That's what we're talking about here. If Harris raises it from 20% to 28%, it's the government taking another bite of your profit. They're taking a piece of your pie. Okay. Now, did you know that real estate, you can actually not have to pay capital gains tax? And you might be thinking, hold on, wait a second here. That doesn't make sense. You got to pay tax and everything. And I understand that. I get that. The tax code, there's 4,000 pages of tax code. It's complicated. Nobody sits down and reads all of it. But the thing is that the IRS also understands that there are people like you and I that are stimulating the economy, that are providing housing, that are doing good things by investing in real estate. So there are some, they might call them loopholes, but there are, I don't call them loopholes. This is just, it's part of the process. It's wherever your money is treated the best is where you're going to put your money. That's it, bottom line. And so they give more favorable treatment to people. And there's this one called a 1031 exchange. And literally what it is, you can make that profit. Let's just say it's a $100,000 profit and never pay tax on it by deferring it forever. I got to be careful with my words on this. I can't say it's, you don't ever, like there's no tax, whatever, but it's technically a deferral. So what we do, you don't have to do this, but what we do, instead of paying that capital gains tax, when we sell, all we do is reinvest it into another income producing asset, one that pays us every single month in rent, and then we don't have to pay the tax on it. You can actually defer until the day that you die, if that's what you choose to do. Now, there's no limit on the number of 1031 exchanges that you can do. You can do these over and over and over again. Last time that I've checked, and I've gone through both political candidates, the Biden administration, they were trying at one point to make the 1031 loophole go away, as they called it. The Harris administration, however, has not copied and pasted that to my knowledge. I have looked everywhere that I can look. If someone sees something else that's out there, please update me because I want to speak the truth. But I have not seen her copy and paste that. I think that the 1031 would be a really hard one to make go away. There's too many members of Congress that have real estate that don't want that to go away. The other thing that you can do with real estate, and this is, those of you that you plan to own real estate or you're already invested in real estate, pay close attention to this, because regardless if Harris gets in or if Trump gets in, you'll want to do this, okay? It's called leverage. You can literally get your money back out of an investment. You can even get 100% of it, sometimes even more, back out of an investment by using leverage the right way. What the heck is leverage? Well, let me give you a real life example. The property that I showed you earlier, this is the one, we paid $492,000 for it. We cleaned it up. We rented it out for market rents. I then went to a bank. On this particular deal, I had a partner who put cash in the deal, okay? I then went to a bank and I said, hey, bank, I spoke with a banker named Tyler at CCF Bank up in St. Cloud, Minnesota. I said, hey, Tyler, we've got this property. We don't have any debt on it. We would like you to put a loan on it. And so I can take that cash and give it back to my investor. Could you do that for me? And Tyler said, well, let me take a look. He went through the numbers on it and he said, yeah, you know what? Not only can we put a loan on it, but I think you're going to be really happy with the loan we put on it. And so the numbers came out that it appraised for $1.4 million. That means that that purchase price that we bought it for, $492, it just got valued way higher than that after we did some of the fix-ups and rented out the place at market rate rents. And so Tyler's team, the bank, they were able to issue a loan somewhere around $1 million. And I took the $1 million that came out and I immediately gave it back to our investor partner. Now, how would you feel if you were the investor partner? You still own half of this building. You still get to collect the rents from half of this building and you got your money back. Who here would do this kind of deal all day long? Just type yes in the comments if this is the kind of deal that could make sense for you. I'm not signing you up for it because obviously this is one we've already sold. We don't own it anymore. But who would like to be able to get to recycle their cash and get it back over and over and over again? Now, the best part about this, I see that, Amber, I see that, Mark, awesome. The best part about this is that when you take the money from the bank, it is tax-free, 100% tax-free. This isn't some crazy loophole or anything like that. That's just the way that it is. Because the way that the IRS sees it is they say, well, eventually you have to pay that money back. Which you do, but not you personally. You see, what pays it back is the rental income that comes in. The rental income pays that loan off over time. And so it's a beautiful, beautiful thing, this leverage concept. And this is a way that you can get into deals regardless of who's elected president. If you can get into deals like this, run for them, grab them as fast as you can, sprint over the sprint as fast as you can to grab deals like this, because they're a little bit more rare, but they're out there. They can happen like this. Okay. All right. Let's talk about this one. This one is unrealized capital gains tax. This is a little bit scarier for some people. Let me put it in 10-year-old terms first, and then we'll come back into the high level, what you can do with it, the ninja moves. Unrealized capital gains, think of it like this. Pretend you're going to go plant an apple orchard. You plant a whole bunch of seedling trees, and you're waiting year after year. You're watering them. You're taking care of them. You're adding fertilizer. You're waiting. Apples sometimes take 3 to 7 years to grow. But the government comes by at least once a year, or whenever frequency they choose to, and they say, well, hey, we see that your land is worth more money now. You've got apple trees here. You've got an apple orchard. It's definitely worth more money. We want you to start paying tax on your unrealized gains. Now think about that for a second. If you were that apple orchard owner, you've never actually produced apples from it, how on earth do you pay that tax? They tell you that your land value has doubled and now you got to come up with some big tax amount. How do you even pay that? You didn't make any money off the apples. And let's just say that you did pay the tax, but then, the next year the value goes down. Is the IRS going to give you a rebate? Imagine this. Like, it just sounds really, really crazy. I don't know how they would actually implement this, but that's what's on the table right now. Basically, tax you before the fruit comes. We have an industrial investment right now. It's a manufacturing facility in the Midwest. This particular shop, like, it's kicking butt and taking names. I will do a very high level overview on this, but I want to illustrate it from a tax perspective. When we bought this shop, it was shipping somewhere between $46,000 and $60,000 per month. That's like the money coming in. Basically, let's just call it 50 grand a month. Now, a little bit more than a year later, 14, 15 months later, it's doing a 37% increase on it. It's doing $69,000 per month. Now, could you imagine if the government came to us before we actually shipped the product out the door and they said, hey, we see you're producing more product here at the shop. We know you're going to make more profit on it. So that way, therefore, you're more valuable right now. You got to pay us tax. Could you imagine that? Like, we haven't even shipped the product out the door yet. Sometimes we don't collect the money from the customer until the product actually hits their facility. How will we come up with extra tax money on this? Now, it's ringing very true for me right now because we have another one of these almost identical shops in a different city up in Cincinnati, Ohio. And that particular one, like, we've almost doubled it. Like, I think that by the end of the year, our EBITDA, we could probably double that thing. And so, like, I get scared thinking about the government coming in and dipping their hands in the cookie jar, taking something from us that we haven't actually earned yet. Because I know they're not going to give rebates. Like, I just can't see that being possible. So in a nonpartisan way, I'm going to comment on this one from a responsibility standpoint for our investors and for the 30 people or so that work here. I really don't want this one to come true. The good news for most people is that they're saying that they're only going to go after people that are basically worth $100 million. $100 million net worth or income of that range. The only bad that I see is that usually they'll open a policy with, some big brand. We're going to go after billionaires. And then once it's in, they amend it later. They lower the threshold. I was on a call last night with a group of very sophisticated investors, a couple billionaires, a lot of millionaires on that call. And they were actually selling passports to St. Kitts, foreign country. Why were they doing that? They were selling them for between 150 and 300 bucks a pop. Why were they selling the passports? Because a lot of the really high net worth individuals, they're worried about this one. They're saying, well, if I'm going to get hit with these kinds of taxes, because my net worth status is over 100 million, I'm going to leave the United States. I'm going to take the passport in the other country and I'm going to renounce citizenship inside the United States. And I know it seems a little bit wild, but that was the real conversation happening on that call last night. Just went through it. And there were at least 2 people on that call that said, hey, I want the passport, literally on that call. Okay. But I have to challenge the notion and the thinking on this a little bit. The United States of America is a unique place. I know that there's some things that all of us could say need to get better. And I agree with you. Okay. But if you look around the world from an investment perspective, like let's just take some snapshots. Argentina, you can Google search this, but Argentina, they froze bank accounts for a certain period of time, taking money from people. Venezuela, I won't even get into Venezuela, but you all know what happened there. Like that was a beautiful, prosperous nation. It's been ruined by bad leadership, essentially. Colombia, I have a soft spot for Colombia. I know back in the 90s, they were famous for some bad stuff, but they cleaned up their act a lot. But now their newest president, he literally just 2 weeks ago was trying to force people with more than $36,000 in a bank account to invest it into the government. He tried to force that. Imagine that. And my soft spot from Colombia is because my wife is Colombian, Jennifer. And so we've considered investing in Colombia a lot. But because of moves like this, I haven't. And I probably never will because of moves like this. Okay. If you look at Europe, if you say, well, hold on, Europe, that's got to be a solid base. That's got to be the place to go. I know this slide doesn't do the justice for it, but if you scroll around Europe and look at their capital gains tax, and you compare it to what even Harris is proposing at 28%, or what our current capital gains tax is, which is closer to 20% for most people, it is insane. Like literally, Denmark is at 42%. United States is beating them all. Not every single country, but most countries. You got Spain, 34%. Like the European nations, they have high capital gains. It's not cheaper to go invest over in Europe, not by a long shot. And then if you just look at it from a market perspective, when you're making an investment, especially in real estate, you want to make sure that there's a market to resell on the backside. You don't want to be nervous or scared about that. Like if you need to liquidate and get cash back at some point in the future, maybe it's for your kids, maybe it's for your grandkids or whatever, maybe you need to live on it. You got to know that there's a market for it. And if you compare the United States of America to every other market in the world, this is a snapshot of it. The United States is the very top line. I'll zoom in from another view so you can just see the top 5. The United States is not even close in size to the next biggest market. It's so much bigger because the rest of the world recognizes and agrees that we have the best opportunity here for free enterprise. And so money flows here. It flows in, it flows out. And for that reason, because it's the largest, it also becomes the safest. And this is a survey taken from around the world on who people think is the safest country to invest in. And you can see the purple bars, that's the United States of America. The green bars, that's other countries combined. The next biggest one is the United Kingdom, which is the gold bars right here. Okay, the United States is by far the safest for this is an active group, MSCI, collecting data from worldwide commercial real estate investors. Okay, there's a lot of reasons for it I won't get into. I don't have time for all that today, but United States currency is everywhere. And so it's just embedded in the world's economy right now. One more note, and then I'm going to flip over and start taking questions to go through your guys' questions. Okay, commercial real estate values over the last 75 years, they've gone up. You can see on the screen right here, they've been steadily increasing. Yes, we had a downfall right after in 2006, 2007. They actually slid before the Federal Reserve cut rates last time, because remember, commercial real estate, it precedes residential real estate. It's the same, almost identical pattern to what we're seeing right now. Commercial real estate fell, and then usually residential does something somewhere afterwards. Well, commercial real estate on the long haul, it looks really good. People that invested 50 years ago, 20 years ago, they look really smart right now. It's not very hard for them to do that. Okay, so we have to keep that in mind. I firmly believe that single families, they're going to see a little bit of a correction over the next year or so. I don't know how much it will be. That's all crystal ball talk. But multifamily, I believe that we hit bottom and we're heading up right now for multifamily. Okay, I won't go into all of the data on single family and like which markets and all that kind of stuff. You guys can do your research on your markets, but I've done it all on commercial for you, okay? America, at the end of the day, it always finds a way to make capital grow. Look at 75 plus years of data like I have, and you'll see America, especially commercial real estate, already gone down and hit bottom, and it's on its way back up. It finds a way to grow. It doesn't matter what happens. Hardworking Americans, they figure out a way to make it work. Of the last 12 years of presidents in this country, how many of them were Democratic led? Of the last 12 years, think about this. We had Obama, Trump, Biden. You could even go the last 16 years. The majority of the time, it was Democratic led, Democrats in office. So I know that there's been some angst put into the marketplace about unknown tax policies, unknown economic policies, because no one really knows Kamala yet and what her policies will all be, other than what the little ones that I got to publish for you guys today. But no, at the end of the day, this country has survived Democrat presidents. It's survived Republican presidents. This country it's America. Like, we're going to figure it out one way or another. Okay. The next 4 years, they're going to go by really fast. All of us know that. Let's instead think about the future. Let's think about our next generation. Okay. That's where we really want to aim. Every 10 years or so, we're going to have some president that comes in and finds balance and brings us back to center, whether it's from the right side or the left side. Okay. I hope that you found some of these viewpoints today helpful. We know that your capital can do more for you, especially when you're doing it through shared real estate investments like that. And we'd love to help you build your portfolio. So if you're an accredited investor right now and you're considering and you're looking at investing options, then please take a second to book a call with us. Sue, if I could ask you to drop a booking link in the chat. We have a couple of upcoming deals that will blow your socks off. One of them that I just kind of summarized earlier, I'll put it on the screen in a second as I start taking questions. But some of the deals that are out there right now, they're amazing. I don't think we're going to see opportunities like this that far down the road. What happened last time this whole correction went is we had about 18 months of good buys. Like, you could go out there and buy killer deals. And then all of a sudden they all started drying up. Okay. Especially in the commercial world, because there's more demand for this stuff. Okay. So we encourage you to book a call with us. We can chat through opportunities together and get to know one another, build a relationship. And then we also encourage you to go to our Facebook group and join in our community. Talk to other investors that are there. Get to know us a little bit. That community is called Partner with Home Invest. Partner with Home Invest on Facebook. Thank you for your time today, and we look forward to seeing you at our next event. I'm going to go ahead and tackle some questions, and then we'll close this up. So I'm scrolling the back. Zoom user says, of course, we're going to make it work. I agree with you. Okay. And Sue, if
Brenda,
you want to fire, go ahead.
Brenda had a call, or had her hand up for a little bit, and so did Rose. Do you guys still have questions?
Yeah, you can either talk. If you're on this platform with us, you can talk. We can unmute you and we can chat out loud too. So we're 20 minutes away from the Federal Reserve making the announcement, guys. 20 minutes. We get to see who is the most accurate. Was it 0.25? Was it 0.5? Or will they go bigger? If it's a small cut, that's a good signal that he's still calm. No calamity. If it's a big cut, like 0.75, that's a good signal that he's a little bit more worried. He won't show it in his face though. Watch. I went back and looked at this over and over again, this trend. Jerome Powell is really good. He just plays it neutral. Doesn't matter what's going on. Doesn't matter if unemployment's starting to go up really high. Doesn't matter. Like, he plays it so cool. Cool. Chris, what about the questions we wrote when we signed up? Chris, if you remember that, I would love to have it. And I apologize, I don't have that. My bad on me. I don't have that with me right now. If someone on my team could help pull them, if you know where those are, that'd be amazing. But Chris, if you give me a couple notes on it, I will answer any question you got, or we can unmute you and you can fire away and I'll answer your questions too. The most common questions I'm getting right now are how are we doing these deals? Like, how are we actually finding the distressed ones? I'm going to go all the way back to the beginning and show you this particular one, the killer deal. So this is an apartment building in a very notable city that you all would know. I can't release it yet because we're still negotiating it, and I signed an NDA with the seller on it. But this particular property, the seller bought it for over $5.5 million just 2 years ago. And right now, the price point in which we're likely to engage is 3.5. Imagine they bought it for over 5.5 and we can get it for 3.5 today. Now, what happened? What went wrong? There's all kinds of things that happen. The biggest one, though, is that it's not that the property is bad, it's that the debt is bad. They took out a bridge loan. A bridge loan, what that means is that it's a short-term loan. It's meant to be a bridge to get you into a property temporarily, and then you get into a longer-term loan for the long haul. It's not like, you know, Fannie Mae commercial or residential mortgages that you lock in for 30 years. In the commercial world, you can usually lock in for 2 years, 3 years, 5 years, or 10 years. And that's about the longest you're going to get with big commercial stuff. And the particular sellers on this property, they locked in for 2 years. And unfortunately, their 2 years is up. Their loan is now expired. It's come due. And they have a decision to make. They either have to pay it off in full right now, or the lender could start the foreclosure process. And the position that we're stepping in right now is we're stepping in basically to take out the lender. And so unfortunately for them, I don't know them or anything like that, nothing personal, but unfortunately for them, they'll lose their equity. They'll lose a couple $1,000,000 getting out of that deal, okay? Brenda says, how do our offerings compare to other offerings? Brenda, a couple of things. We like to go after basically good, what's the right word for this? Sue, you can help me with it, but we both like to sleep very well.
Buildings?
Yeah, boring brick buildings. That doesn't sound very sexy, but that's the truth. We've been in this business for a long time. We've done over 1,000 properties. Like we're cresting probably around 15, maybe 1,600 at this point, but well over 1,000. That means that we've actually been in them and out of them. We bought them, we did something to them, and then we rented, we sold, whatever we did to them. It's not just we bought them and we're sitting there hoping for someday in the future that we can show that we're making profit. Like we've been in and out of a lot of properties. We've been the trusted go-to supplier for 2 different hedge funds. We've got hundreds of individual investors, just like you guys. Like we've been there and we've done that. So what makes us different, boring brick buildings, because we can get predictable results. That's it. Susan says, do you have any words? Oh, go ahead, Sue.
You're missing a couple. So Brenda is asking, can you help with the timing if we are conducting a 1031 exchange?
Yeah, Brenda, we would just need to know from you which timing you need. So if you could jump on a quick call with us and map out and tell us, there's a few questions we're going to ask. Number one is, what is the timing that you have left to place your capital? Identify a property, then place capital. And then more important, this is one that most people miss, is do you need to have debt with that placement? You see, when you sell your property that you're coming out of to go place it into a new deal, if you had debt on the property that you sold, you're going to have debt on the new property. And a lot of people miss that. They forget to ask that question, or maybe their 1031 exchange person doesn't tell them. So that's one of the first questions that we're going to ask you. We don't want you to miss that because you might miss out on your actual tax benefits from it. And once we know that, then we'll go to work. We can help you. We can help you with your placement.
And it's best to come in early on a project, before contracts are being signed, because the seller has to sign documents that there's another player. So we have Tammy. Will the upcoming deal in Kentucky still be a deal if Harris gets in?
Will the upcoming deal still be a deal if Harris gets in? From my unfiltered approach on this, even if it doesn't matter which candidate's elected, it's still a good deal. If you look for a different home for capital right now, let's just say you look around the world's kind of scary right now, just to put it blunt. I have very privileged access to investment opportunities outside the United States, and I'm not putting a dollar outside the United States. There's just no way. There's too much uncertainty in other markets right now. And my research shows that the United States grows through regardless of which president is in office. We have 3 branches of government. Yes, the president is a big one and they can influence a lot. But at the end of the day, when you've got Congress members and Senate members that hold a lot of real estate and you try to shove some law down their throats that's going to punish them, you can darn well believe that they're going to stand up and push back. That's just what happens. So if you try to touch their pocketbook, most of those bills kind of get killed. They're nice headlines though, like the unrealized capital gains. I think it's a really good headline for them, but I don't think it would ever come to fruition.
So Chris has a question. If you're not accredited, what do we buy?
So if you're not accredited, it's totally up to you. Where we started in our journey is we started buying single family houses because they didn't require as much capital. Now we've moved over to commercial. It's just much easier for us to manage in place capital and have everything in one spot rather than a whole bunch of doors. But single family could be a good option for you. Just make sure you pick the right market. There's some settling that's going to probably happen in single family. You could also consider, what does it take you to get to the accredited status? What is the learning roadmap for that? Can you invest in yourself to learn how to get there faster. I've seen a lot of people figure that out. And so that's kind of where I'd point you.
Will the government be able to go into self-directed IRAs to take money?
Will the government be able to grab money from self-directed IRAs? That's a great question. In other countries, we've seen that actually happen. Argentina, Greece, two notable ones that come to mind from the last 15 years of my life that I remember seeing. It's possible. It's very possible. In the United States, do I think it will ever happen? I pray to God, no. I mean, I hope that never happens. That would destroy so much confidence in the United States of America. But could it? It could. How do you prevent that? I wouldn't leave my money sitting in cash. I think that leaving it sitting in cash uninvested is, I don't think we're being a good steward. If you go to Matthew 25, I won't go all biblical on you guys, but I just have to say this. Matthew 25, it's the story of the talents. You got a master going away for a long time, and he puts his 3 servants in charge of his estate. He gives them each money, and he says, go out and invest this. He comes back a few years later or whatever time it was and says, hey guys, what'd you do with the money? The first one says, master, I doubled it. And then the master says, you are great. You're a good and faithful servant. I'm going to give you more. The second one steps up and says, master, I doubled it as well. And the master says, you are also a great and faithful steward. I'm going to give you more. And then the third one steps up and he says, master, I knew you were a tough man and I didn't want to lose it. So I buried it under a rock, but I dug it back up and I'm giving it back to you. Here it is. And pay attention to this part. The master then says, you lazy piece of poo. I'll do a Nate paraphrase. It's not a direct quote, obviously, from the Bible. You lazy piece of poo. You are out. And let me know in the comments, have you ever noticed in life that when people are lazy, maybe with their finances, they tend to lose their money? Have you ever noticed that people that just don't get that concept of going out there and working hard, they tend to lose what they've got? It tends to flow to other people. I really think that parable, it's a life lesson for all of us. Like if you've got money in an IRA that's uninvested, I don't know that does any good for you. I think that if you follow that parable in the Bible, Matthew 25, it's also written in Luke 19 from a different perspective. But if you follow that, you'll see we're supposed to go out there and invest. We're supposed to go out there and grow the capital. We shouldn't live in fear. Instead, we should go out there and make it happen. So the government definitely can't steal it from you if it's in a piece of real estate or in some other hard asset. It'd be really hard to extract it from a big, beautiful building that's paying you cash flow each month. I love that question. Thank you.
Do you have any more information to share on the New York property?
So the New York deal is not our deal. I wanted to show some actual sold properties so you guys can see what's happening. I'll put it on the screen for you. I'll give you any information that I can. This one here, this is the most drastic example. Now there's some weird nuances about this one. They had some leasing rights, ground rights and whatnot that got extracted from the property. So it kind of disparages the sale a little bit, but it's a huge example of the sign of the times. We had an asset that was bought for $332 million that was slashed in price. It sold at an auction. There was only one person bidding on it, one. And he got it. He lowballed it at 8.5 and he got it for 8.5. Like he stole this building. You could never build this building in New York. This is on West 50th Street. I was just there in this area shaking hands with one of our investors who's been with us for a decade. And I wasn't too far from here. I had lunch with him. This is a steal. Okay. This kind of stuff, it's only happening because of the market that's upon us right now. We've got debt that's expiring on people. They can't go and refinance it because they don't have occupancy that they need to get a new bank loan at today's interest rates. And therefore the lenders are forced to step in and force a sale. This one that's just sold for half of what it was bought for a little bit more than a decade ago. This Washington, DC. This one's probably my favorite though, because this is a brand new multifamily property. This is like what we're talking about at the core. The loan on it was $207 million. And those of you guys that have taken out a loan, you know that with a loan, you have to do a down payment. So I don't know how much was the total investment in this. Is probably 250 million, but it just sold through a short sale, which means the bank took a massive haircut for $129 million. This is maybe even half price. This is insane. I haven't seen commercial drop this much in my lifetime. And I watch the market. I study it. I look at it. this is a very, very massive drop. So great question on the New York angle.
Are investors paid monthly or quarterly?
Great question. Currently, all of our systems are set up for quarterly distributions. We are exploring our next fund. Whenever we open that, might be fourth quarter this year. But when we open that, we're exploring potentially doing monthly. I know that's kind of been a trend in the marketplace. We're exploring it, but right now it's quarterly. Everybody gets paid quarterly.
If there are new tax laws coming, should Harris get in? Will there be a time delay before it is effective?
So if a new law passes, will there be a time delay? Yeah, almost 100% of the time. Usually there's some they pass it. It's got to pass all three branches of government. Everybody's got to sign off on it. And then usually there's some implementation in the future. Sometimes it's 6 months, sometimes it's a month, sometimes it's a year, 2 years. My anticipation is that there will be some kind of delay. I do see her getting past if she got elected, the capital gains movement from 20% to 28%. I think she could get that through. I think that would be an easy one to get, not easy, but it would be easier to get through. Unrealized capital gains, I think that's a big fat no. You guys can tell me what you think. Yes or no? Does she get unrealized capital gains passed? Yes or no? That one, to get that passed, she would have to convince members of the Senate, members of Congress who own a lot of assets. Don't be fooled. Like most politicians, they're wealthy people. They got there because they're influential. They have circles of power that help them come to the podium and help them get the votes. Like they're usually wealthier people. I know this because I study their tax returns. I geek out. I'm that guy. I've gone through Joe Biden's tax returns. I've gone through Kamala Harris's tax returns. Like I know politicians. They're not going to want their pocketbooks dipped into. So if Kamala got elected and she's trying to pass this unrealized capital gains, she's going to have to convince all of them that they're about to get hit over the head with a hammer and get these taxes. I don't see it ever going through. Sue, did we miss any more?
I think that's it.
By the way, I hope you guys can agree with me, but Sue is amazing. I'm going to spotlight her for just a second. This woman right here, you just saved me, Sue. Thank you. Thanks for coming on and helping us. Sue started as an investor here a long time ago. We built a relationship, and now she's to the point she's retired from her career, and now she just helps our current investors. A lot of you guys already know her. You love her. She's invested over $1 million herself into deals, but she is here to help people with their investments. I'll also put up, Doug, if you don't mind for a second, I'll put you on the screen, and we'll say hi to Doug too. Doug is very similar. Doug, this man's one of the hardest working men that I know. He's finding incredible. When we're talking about killer deals, he's brought forth 2 deals that just about blew my socks off. And he also helps investors on the team. So thank you both for being here. So if you guys are booking a call with us today, know that you'll probably talk to one of these 2. You might talk to Steve on our team or Chris on our team as well, but you're in good hands if you guys are booking a call with us. Sue, anything else before we close out? Or Doug?
The one lady who was asking about if you're non-accredited, we are still working on the crowdfund, right, Nate?
As soon as we have time, yes. We've been so busy. We've been so busy just making sure that we have the deals coming in and the deals closing that we're actually working on with our accredited. We just haven't had time to put it all together yet.
Mm-hmm.
So, but yes, it is the hope that we have a home for all of our non-accredited folks in the near future too.
Then, well, Tammy stuck a question in here. What can we do to fast track becoming accredited investors?
I would immediately consult with, so we have another side of our business called Home Invest Academy that Chris Strickland runs. I would recommend that we get you on a call with him. Maybe Sue can do an introduction and talk to him. Chris is doing it right now. He's helping a lot of people. I actually was just in the messenger chat replying to one of our folks over there with some questions they have as they're looking at their growth. But I would get with him and just have a conversation and see how he could help you get down that path faster. It's all the steps that you plan out in your head. Just be very, very diligent and map it out, and you can achieve it. So talk with Chris a bit more. Sue, did I miss
think
any
just
other ones?
kind of being frugal too. I mean, when I first was hired by Delta, I moved there with like $14,000 worth of debt, and I just kept track of all my spending and figured out where I could save money. You know, there's lots of ways.
Agreed. Lori snuck in one more question. We'll close out with this one right here. Lori said, I'm sure I missed it, but what are unrealized capital gains? So Lori, we own a industrial piece of real estate that does manufacturing. We're doing really well. Like one of our industrial pieces, we've literally doubled the net profit on it in a short window of time. But what if, for example, we produced a bunch of products, but we didn't ship it, so we haven't been paid for it? What if the government came in and taxed us because they say, hey, your value has gone up, you're producing more, so we're going to tax you on the value before you even collect the money from the customer? That's what an unrealized gain looks like. We haven't got the gain yet, the money's not in the bank, but they're saying, hey, because I see it right there, I can see it with my eyes, you're going to make money, I'm going to tax you on it. But what if the customer cancels the order? What if we don't actually collect? What if our customer doesn't pay us for whatever reason? Is the IRS going to give us that money back? Or what if you're a farmer and you're producing crop? What if your crop gets ruined right before harvest? What if you don't make any money that season, which happens? It's real life. And so that's why unrealized gains, it's such a scary, scary tax to even talk about. I really think Harris is using it to talk about how they're going to tax the billionaires. This is how we're going to get them. And it's a really good mantra to say from stage. But at the end of the day, it's just stage talk. There's no way you're going to convince members of Congress and members of Senate who have substantial assets that they should get nailed with that tax, whether it's now or they amend it in the future and they get taxed on it. Like I don't ever see that becoming reality. I'm definitely not afraid of it. Not at all. Ron says, does unrealized capital gains apply to homes or just businesses? It's unclear. It's unclear. From what I understand, it could be anything. Could be your stocks in Apple. It could be maybe you got aluminum cans you've been saving up in the backyard to cash them in. From what I understand, it could be anything, but it's unclear. A lot of this presentation, like I hope you guys got a few good like viewpoints and good nuggets out of it, but it was really hard to put together. 75 years of data plus Kamala's policies, they're not very well articulated. They're very bland. It's no detail. It's like, here it is, just a little sprinkle, and that's it. So we have kind of a black box around the details of these economic or her tax plans, at least. Cool. Hey, we really appreciate you guys. Thanks for spending some time with us out of your busy day. We don't take it lightly at all. We look forward to collaborating with you, whether it's now or in the future. Go ahead, book a call with our team. Sue, if I could ask you to drop that link one more time. For those of you on social media, if you don't see a link, just type link in the comments and we'll get it to you. We'll reach out to you personally and we'll make sure that you're able to talk with us. It's all just about making sure that we build a relationship. The deal that I showed you earlier, once we do publish it, it's going to go really fast. Not because we want to rush anybody, but because on bank mitigated sales, they're sensitive. And once the seller says yes and the bank says yes, they want cash like right now. But you end up getting killer deals. So we've got one of those that looks like it's coming up for us. So if you're interested, book a quick call with us and we'll get you all prepped for it so that when it comes, you know about it first. Okay.
Yeah, I have a couple people penciled in already, so give us a call.
Awesome. Thank you guys. God bless.